Hi, welcome to Market Alert for Wednesday, 16th of October 2019. So yesterday we see the crypto markets turn red while Bitcoin price takes a hit below 8,200. So let's have a look at this in a bit more detail. The market still is very quiet, bit of a sensationalist type of headline really. When you consider, looking at the daily chart here, we have been below 8,200 a few times, to say the least. Let me just mark this up for you so you can see that. I'll leave that in. And there you can go. You can see we've been down to 7736. So to be below 8,200 is no big deal. And the market's still very quiet and tightly ranged here for the last 5 days. 4 days actually. Going into the fifth today if it remains quiet. In the 4-hourly chart you can see there's a bit more volatility. We're getting those horrible spikes that I've spoken of many times in the alert as well. We don't like these. We prefer this nice fluid pattern. We don't like these abrupt spikes that we get, and what you'll see it now in the intraday one, where you get this huge activity that comes into the market for about 45 minutes and then it just goes back to being quiet. That said, the market below the 200 MA there, but it's still not enough movement. I mean, we were nearly towards the end of the trading session before we actually got a $50 move from this red line down to the blue line. So you can see how quiet it was, and then we're only $200 from these two red lines here as well. So very quiet yesterday. Let me just move the chart across. And you can see overnight the market's barely moved. Well, it hasn't even moved $50 overnight. So still a bit quiet and worth standing aside until things pick up a bit. Just the way it is, not a lot we can do about it. I'd rather keep my gunpowder dry until the volatility kicks up a bit. So it's just very tight there in the daily chart. Meanwhile, in the stock markets, stocks saw short squeezed, bullion, Bitcoin and black gold bruised, meaning they all fell, which we saw. We're not a lot for Bitcoin or gold really, $70 I think for the gold price. So and this sums it up really. This is a distraction, certainly with the repo market, the printing of money, and sending the markets back to the all-time highs. It keeps people keeps their attention away from what's really going on. That said, the market looks like it's struggling on the overnight. This is the daily chart. The market going through the 76% retracement yesterday, but look at the volume. There's not a lot of volume in this market. Will it go back to the all-time highs? Who knows? But that's the goal. That's the key. They want to move the market back up to this level. So let's have a look in the 5-minute for yesterday, and you'll see the market coming down and just touching the 200 MA before prices then go into the moon shoot. Again, same pattern as we've seen for several days now. And then the market trading up to the R2 level or just beyond it, and then trading sideways. And if you look from here, you get from this high down to the test low, and you'll see the market stopping at 76%, and also the resistance area there, natural area of 27,100, and then prices have meandered down and broken the 200 MA and the DP on the overnight, so looking bearish. Apparently something to do with the China trade deal not going through again. It seems to go back and forth, this deal does. One minute it's on, then it's not. The indecision is incredible, but the market reacting to it. But as I say, they want the market on the highs. We've got the all-time high posted there, 27,400. Yesterday we got to 27,100, it's only 300 points away. Will it make it? Who knows? But one good thing, and I'm going to switch over to this now, is the implied volatility. and you will see that this has dropped dramatically, 13.39 down to 11.52 yesterday. The lower this goes, the bigger the correction will be. So we're getting into these sorts of areas where we could expect to see a correction. So even if the market does get to the all-time high, we're then going to be in an area where we can expect a correction in this market. And again, you can see this clearly with the red and the green there. So let's keep an eye on this one. Keep this in the back of your mind that when the implied volatility gets into these lows, we then get a correction. So if you were long, then you want to be careful of any potential quick fire correction coming into the market. Just going back to the markets, let's have a look at the pound. Yesterday we see the prices going through the 200 MA. Question is, will they hold? Well, that's down to whether there's a deal with the EU this week. But at the moment, this is the only reason this is moving higher, is because there is the prospect of a deal with the EU. If we end up with a no deal, then this will be absolute carnage. It'll be the biggest drop you will have seen. It'll be worse than the referendum. So there may be a case they could be marking it up in anticipation so that when they do drop, it will be less dramatic. But let's wait and see. So yesterday, the market waiting for news, as I've mentioned before, trading down to the 200 MA, not going anywhere, and then eventually some news comes out and the market again goes up over a cent, 100 pips, as prices drive to the upside. But the first two trades going nowhere before it is recouped with the third. And like I say, it's a bit like you're waiting for a trade, sitting there glued to it, and it's not doing a lot at the moment. The only other way to have played this, of course, is to only take the buy side, and as long as the market isn't closing below the 200 MA, we've seen the power of this now, then the market remains bullish, as it does trading above the DP as well, which is just tucked away down here. So less per point and a bigger stop to stay in the trade while the market's moving to the upside. I mean, let's face it, they're going to do whatever they can to try and get some sort of a deal. So at the moment, I suppose the logic is that the buy side is better, but of course he needs one announcement to say there isn't going to be no deal. France, I see that Macron's talking about vetoing an extension, and if that's the case, then the pound's going to get hammered. And talking of news, what else have we got today? Carney's out again. He was out yesterday. I forgot to look at the news. We got the figures today, CPI figures from the Office for Line Statistics. They're out later. If anybody can believe that inflation is sitting at these levels, then you need to go and see a psychologist, because I can tell you now, the way prices are going up at the moment in supermarkets is staggering. Go and pick an item from this time last year and then have a look at its current price and do a calculation. You'll see what I mean. Just on basics like butter, bread and milk. So we've got the US out at 1:30 as well, and then Carney's out at 2. Again, he's either going to boost the pound or he's going to force the pound to drop. So who knows? I don't know what he's coming out for or what he's got to say. It's nothing in particular, unless he's going to talk about the overnight repos, but I suspect not. So, Carney out then. And then the last few things, we've got 10-year is back. You can see there yesterday, now sitting at 0.1. on a positive note, and then longer term, this is what it's starting to look like as well. You're starting to see the green coming in on this market. You can see just that green there. And finally, Deutsche Bank. This now above the 200 MA, and I'm absolutely convinced. No proof, but I am absolutely convinced that Deutsche Bank is being propped up by the Fed. and that's the reason you're seeing the repos going up and no end to it. They said they were going to only go through September. We're now through October, and now talking the first quarter of next year as well. That tells me there's a problem with liquidity in the banking sector, and I would imagine it's something to do with this bank, along with JP Morgan and Citibank as well, as they hold the most derivatives. Right, that will do it for this one. Let's see how things pan out today. Getting closer to D-Day with regards to Brexit. Watch the stock market in the US as well. Bitcoin still a bit flat at the moment. Okay, thanks for watching. See you in the next one.